Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 23rd, 2010. Well, folks, a flat day on Wall Street today. Very interesting day for a couple different reasons, but first let's start with what the indexes are doing. The Dow is down 4 points on the day. S&P 500 is down 1 point, and the Nasdaq is up 11 points. So Nasdaq bucking the trend, being led by none other than Amazon and Apple once again. Take a look at Amazon and Apple, both significant up days today. Amazon up $3.25. If you take a look at the daily chart, just take a look at that. You can see the double top getting pierced a couple days ago, and the stock continues to roar higher. Unbelievable move here. Again, just to think that not too long ago on earnings, the stock was $100. Now it's trading at $155 per share. In addition, Apple Computer, take a look right there, folks. Just off of the last pivot low, look at this little pivot right down here off of this little support area, right above the 200 moving average. The price down here was approximately $235. The stock is now trading as high today as $292.75. That is an unbelievable move higher, folks. Unbelievable across the board, but it continues to go higher. These two stocks are keeping the Nasdaq positive, and again, that's the only index today that is positive, and we'll take a look at a few other things. Let's go back to the SPY, discuss the interesting factors of today's intraday chart on this intraday video by InTheMoneyStocks.com. All right, first off, we had a gap down this morning, a sizable gap down. It looked like the market was going to have a little bit of a drop today for the first time in quite some time. However, that did not last long. The gap down essentially occurred because you had European PMI economic data coming out overnight. That forced the futures down overnight. This morning we had jobless claims. Jobless claims came in a little worse than expected, around 465,000. All right, that's about 12,000 worse than last week. And again, you're seeing a drop in jobless claims, or a rise, I should say, as the number is getting higher and higher of people filing for unemployment benefits. So again, that happened to be a little bit of a negative for this market, keeping the futures on the weak side pre-market, and the market did have a gap down. On the spiders, we closed yesterday at 113.42. Today we gapped down to 112.49, almost a dollar gap down. You did push down, piercing this key level right here. You can see I have a trend line right on the chart, and again, this trend line stretches all the way back to this little pivot area right here. So you came down right into this area of support. It actually goes back even further. You can see the day before here, right here as well. But nonetheless, that's where that line comes from. As we zoom back in, the market quickly reverses after pushing initially lower and creates a bottoming tail. A bottoming tail tells us that there's a decent chance of upside. Why? Because a bottoming tail is a bullish signal on the charts if you're reading the candlesticks. Sure enough, the market pushes up, has a small pullback here, and then rips higher once we get more economic news at 10 a.m. Eastern Time. At 10 a.m. Eastern Time, we got leading indicators, which came in slightly better than expected at 0.3%. And again, we got existing home sales, which were up over 7%. The market initially pushed higher here, had a little bit of a pullback. Notice how when you pushed higher on this first initial candle, you cut through this blue line right here, all the way up underneath the green line as well. Notice what this green line stands for. This green line just yesterday was the pivot low of the day, therefore that was going to be resistance. Notice what happens on the next candle. The market pulls back. Sharp pullback, red candle right there. For scalpers out there, this is a great little scalping opportunity. Market pulls back. Where does it go? Right back into the blue line. The blue line is now a little bit of support. Sure enough, it comes back down, kisses it, and then the market starts to move higher again. The second time up, you don't want to short the green line. The second time up, it's always weaker than the first time. And sure enough, the market blasts through. We go back up. We hit gap fill, which is right here. That's gap fill. You can see you touch gap fill, and at that point you pull back, create a little bit of a topping tail, but it's very short-lived. Market does pull back into this green trend line and then starts to maneuver higher. So again, up we go on the spiders. Spiders top out around the 113.67 level, slightly to the positive side, and then ever since then, the market has gone invisible. And what do I mean by that? Well, the market just stopped trading, essentially. The volume died out. Everything has gone quiet. We have done only 125 million on the SPY, and it's a quarter after 2 o'clock here on the East Coast. That is unbelievably light volume, especially because you expected light volume over the last couple weeks. I mean, the last couple weeks, we had the holiday after Labor Day. Then you had the options X week. That was kept in check. And then you had this last week, we had Obama speaking, and then the Federal Reserve on Tuesday, this past Tuesday, announcing their rate decision. That was expected to keep the volume light all the way through that. But again, yesterday, you really had an okay volume day. It was okay. It wasn't great. And today, it's dead. I mean, 125 million, I cannot stress that. What does that mean? It means institutions are not trading right now. I don't know if there's some deal going on between the Fed and the government and the institutions. I know there were rumors about that last year in this same time period where the market kind of floated up and up and up, and the volume was just kept light. Remember, if volume is light, the markets generally float up. Again, same thing with the dollar. If the dollar slowly comes in, then you expect the markets to float up. The markets go the opposite way of the dollar. Here's the UUP. You can see early on it was strong when the markets gapped down and then really fell apart on the downside and just continued to go sideways to lower for most of the day today. That's helped prop the markets up, no doubt about it. All right, so again, dollar slowly floating lower from the highs of the day, and that's keeping the pressure up on the markets. Again, markets are really not positive. They're not negative. They're basically flat. You have the NASDAQ up, S&P and the Dow down. But you can see how this market, again, topped right here after a big explosion to the upside over the first 2 hours of the day or so. And then the market after that just went in a sideways, slightly lower pattern here. No volume. Look at the volume. You can barely see it on the bottom of my chart. It's that light. And again, it just went to sleep. And again, as I said last year, there were rumors about the Fed making some deals with some institutions to kind of not trade and just keep the markets status quo and propped up a little bit. I'd be curious to know if those rumors start to surface again because it does look a little suspicious here based on that. And again, you did have some economic news today. Markets are having trouble going higher. They're not exactly able to go higher as they're really overbought short term, up 10% in the last 3 weeks or so, but they're not able to fall. Any fall is met with a little bit of buying opportunity or propping. And again, that's led by Apple Computer and Amazon. Those two stocks right there have been unbelievable to the upside. Now, there are certain stocks that are not strong at all. Goldman Sachs has not been able to catch a bid, and that is something you must watch as well. Look at Goldman Sachs the last few days. Markets have basically been flat the last few days, and Goldman Sachs the last 3 days has just fallen apart. If you go to your daily chart on Goldman Sachs, look at this. Tops out about 2 weeks ago at the 200 moving average right here, and the rest of the time it's just falling apart. Yet the markets are not falling apart. That's very interesting and a little bit of a negative divergence as Goldman Sachs has always been a leader of the markets. It's always a leading indicator we refer to. All right. Now let's take a look at JPM. JP Morgan remains weak as well. You can see a double top right here hit beautifully, and then JP Morgan coming back in. Now JP Morgan did hit a little bit of a necktie here, which is support. You can see if I zoom in a little bit, two moving averages meeting together, that it creates what's called a necktie. And again, that will be significant support right there. It came and kissed it and has bounced off of those lows. And remember, folks, all these things that I'm discussing right now, whether it's a trade, swing trade, market analysis, education, guidance, whatever it is, we do this hardcore in the Research Center, $49.99 a month. Everything listed at inthemoneystocks.com under Research Center is included. You want to stay tuned to that and make sure you're on top of that kind of stuff. Again, it's priceless information. It's literally making millions of dollars for people out there. You want to be on top of it. All right, let's go to a couple other stocks. ExxonMobil here, up about 8 cents on the day. Not really doing a whole lot. If Exxon continues higher, this white trend line is where it's headed. If it breaks these two moving averages, you can expect it to go down here. This would be your next spot on the downside, but it all depends on these two moving averages right here. Chevron, CVX is the symbol there, is flat, but you did see a gap down on that, and it has recovered to the flat line, which mirrors the market. I mean, in all fairness, the markets are flat as well. All right, so that's what we're seeing at this point, folks. Again, let's go back to the SPY. We're going to flip into the intraday again. You can see the intraday is just floating sideways at this point. Light volume, 126 million. We're doing nothing. On pace for probably about 175 million today at best, as it is about 2:20 p.m. Eastern time now, with only about an hour and 40 minutes remaining in the whole entire trading day. Last hour of the day should be interesting. We'll see if we get any volume surges or any type of movement coming into the market, especially the last 30 minutes. Do we see any sort of maneuvering by any institutions since they've been essentially negated or non-existent for the whole entire day today? We'll keep you guys posted as always. All right, guys, make sure you come join the Research Center. It is priceless, folks. Check it out. 1 month is only $49.99 a month. It starts from whenever you sign up and just continues until that month is over. And again, you want to join that or the intraday stock chat, which again is live analysis all day long while the markets are open. Traders calling out plays, discussing, teaching, answering questions. It's there for the taking. Have a wonderful afternoon and evening, folks. I'll talk to you soon.